All right, let's touch base with the management of Apar Industries. Kushal Desai, who's MD of the business, joins us on the show. Kushal, good to have you. Give us a sense on the revenue growth, which has been a bit muted. Can you break it down in terms of volume and prices? What the trend has been on both those variables?
Yeah, good morning. Actually, the revenue growth appears to be a bit muted because, of the commodity prices which have fallen over the last 12 months, both in terms of, some of the metals as well as, crude. However, the volumes have actually shown positive increases across the board, which is what is reflecting in, the 45% increase in PAT and the 16% increase, in the EBITDA margins. So our cable business has grown, over 30%, year on year. The conductor business also has had a major improvement in, some of the value-added products in terms of sales volume. And the oil business also has shown a 6% growth, in volumes year on year.
Okay, and margins are fairly steady. Do you think that this was a one-off, or can we see your margins continuing to grow?
The margins have substantially grown year on year. We expect actually the margins in the current year to sort of level off at these at this level, or may actually have a little bit of downward pressure, just simply because the implementation of GST, and some of the predictability of demand, which seems to be a bit more difficult in the next few months. Some of the business models in the power sector have been changing, from the old cost plus on transmission lines to tariff-based competitive bidding, etc. So whenever these sort of dramatic changes are there is a period in which, some amount of leveling off takes place, and, the business models need to settle. And I think GST, even though it will be very positive in the longer term, it will have impact on some of our segments in the short term, especially those which are distribution oriented, because I think the clarity is not there in terms of how the trade will actually stock up, products in our lubricants and our industrial oil segments as such. But considering all that, we are still very optimistic that, in the next couple years, all the segments that we are in will actually show, significant positive growth.
Okay. Give us a sense also on the order flow that you've witnessed over the last 3 months, 3 quarters especially, from the start of the year till now, and how you foresee that changing at the start of the financial year, which is the April to June quarter, the quarter we are in.
So if you look at it across businesses, our cable business, we expect 20 to 25% growth over the previous year. A lot of it is being led with the growth in the non-conventional energy sector. We are the largest player in cables that are being supplied into the solar and the windmill sector. Both of those seem to have very good order books and actually growing, particularly on the solar side. In terms of our transformer oil business, we are seeing actually a growth taking place in the orders that are being placed for transformers from the utilities across the board. So our sweet spot really is the high voltage transformers, which are the 765 kV and 400 kV. So there has been a bit of a backlog from the 12th 5-year plan, which is getting fulfilled in the early part of the new 13th plan. In addition to that, we are starting to see the implementation of some of the schemes that the government had declared last year, which is Uday. And so some of the capex spending with respect to that is now expected to start showing up. So on the oil side, we see, particularly in transformer oil, some positive growth coming forward. On our conductor business, actually, the order inflow has been a bit slower over the last 3 months, particularly.
Right.
As some of the business models have been changing, we've been a little bit more cautious in terms of the way in which we've been picking up business.
Okay. All right, lovely chatting with you. Thanks for joining in and giving us a view on Apar Industries and the outlook ahead. By the way, the stock has spiked up. But let's move right on to an ETNow exclusive. And FMCG giant HUL, which has the largest market share